The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the July 17th, the terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there's having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check out the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email. Send it off to Steve at TFNN.com. Inside the subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on terrific Thursday. In fact, we'll call this British Open Thursday out there. So can't give us a call, but send me an email if you'd like me to take a look at some. But let's go take a look at these markets. Right now, we've got all U.S. indices. They are trading to the upside. Dow is up 82 points. S&P 22, 153 for the NASDAQ 100, 18 for the Russell, 122 for the transports, 50 for the semis. NASDAQ Composite up 143. New York Stock Exchange up 31 points out there. Gold is off $21, trade down to $33.37. No big deal there. Continues to consolidate with inside its profile. Silver is up 4 pennies. That's actually trading above profile resistance. Light sweet crude traded with inside. We're looking at the September contract trading at 65.76. Fairly large bullish structured profile that is trading into. Let's say, it's really the currency pairs. We took a look at those yesterday. The currency pair is showing up, giving us some of the bigger signals of changes in trend. So let's do this here. Let's go take a look at the now I can't put the U.S. dollar index on my screen with my white background charts with the data feed that I'm using for it. But what we are taking a look at are the three currency pairs that make up 83% of the U.S. dollar index. In the case of the euro, which is about 57%, if I'm not, 56.7, something like that. Today, the euro will complete a TD9 count bottom pattern. What should unfold is price should rally up towards the screen oscillator and change line around 117. If that comes to fruition, that will put pressure on the U.S. dollar to the downside. If we take a look at the Japanese yen, it completed a TD9 count topping pattern yesterday. Price should pull back to its oscillator and change line, 147.02. If, in fact, it does that, the U.S. dollar index will get weaker. If we take a look at the Great British Pound, it completed a TD9 count bottom pattern 2 days ago. That remains in effect. It should rally up towards 135. So this is a perfect storm. So if that moves higher, the U.S. dollar index is going to move lower. So we're getting ready for a perfect storm here. I don't want anybody to freak out. The U.S. dollar index is losing its luster or something along those lines, because that's what you'll hear. Nothing could be further from the actual truth out there. But we are preparing, or you should prepare, for the U.S. dollar index to pull back a bit. Maybe it's a 2 to 4 day pullback. We'll take things one step at a time. Now, it's not like these patterns can't fail. They can. And if they do fail, then we're talking about a real strong U.S. dollar index. We've got the August contract up for Bitcoin. I believe that is the current lead contract. That's got a TD9 count topping pattern. Price here should pull back towards its oscillator and change line. That's printed out at 117.439. Below that, you'd have support at 114.747. So that's what's going on in essence with regard to the U.S. dollar index and Bitcoin. Let's go take a look at, I shouldn't have done that. Let's go take a look at the New York Stock Exchange, its advanced client oscillator. Yesterday, it did close below the zero threshold level for its second consecutive session. Let's see where we're trading today. We are still trading below that level. So the message of the advanced client oscillator is that sellers are the ones that have the edge out here. The reason why we're not seeing that much is because in the case of the spot VIX index, which is trading below its 50-day X minutes moving average, that's telling us that buyers have the edge. So until these two agree here, we're going to have these choppy markets out there. I mean, at least this set of technical indicators is enough to tell you why we've got a bunch of chop going on inside the markets. Let's go ahead and close those out. And what do we want to take a look at next? Let's go take a look at the daily equity future contracts out there. So they're most certainly worth paying attention to. So we'll pull those up on our screen here momentarily. Got the ES Mini in the upper left-hand side. 63.33 is the number to be watching, because if we close above that, that'll negate its TD9 count top. And in fact, if we also close above 63.35.50 out there, that will negate a. No, that's not actually. No, the top that the price point. That price needs to close above to negate any topping pattern inside of the ES Mini is 63.33.25. We're at 63.47 right now. So we're already in that. We're at 63.24. I'll get my act together. I promise that I will. So watch that. In the case of the NQ, we're trading a new all-time high today. There's no topping signal, no topping pattern. If anything, it's wave number 7 top that could have been in there. That failed out there. So the NASDAQ 100, day number 4 to the upside out there. Maybe we get day number 5 tomorrow before we get a little bit of maybe a 2-day pullback. In the case of the Dow Equity Future contract, this TD9 count top found support at the bottom of its profile. You can almost say that a bullish reversal candle would confirm a buy the D point pattern here, because there is an A to B equals CD pattern. It looks like it's at least completed the one-to-one. Didn't generate Stevie's bullish reversal candle out. Well, actually, probably should have pulled this over to there. There we go. And now if I just move this to the high that forms after, yeah. So, I'm assuming that's about a 0.786 retracement on that B to C leg. Doesn't really matter. We still have a consolidation. There's no bullish reversal candle, so it's not like it's got a Gartley buy pattern inside the Dow Equity Future contract. If we take a look at the Russell 2000, is trading back above profile resistance at 22.53. The real number that you need to see price close above is probably 22.63, 4, something like that. If we get it close above that, then it's going to put itself into all-out bullish mode. However, it's got a Rhodes momentum indicator top, and that's just simply going to get price trading into its swing point from July 10th. So what I'd be watching for today is, does price close above 22.60.20? If it does, then odds favor that we're going to make a run for the high at 22.92.60 out there. So that's what's going on. We take a look at the daily equity future contracts. Well, we've got about 30 seconds. Let's go dive down into this is going to be the gold intraday charts out here. So the gold intraday charts, 60-minute TD9 count bottom pattern. Price is trading above the top of its profile right at that level. We're looking at the lower left-hand chart out there. I was just looking for any quick bottom signal out there. If you do see a close above 33.39.10 at 12 noon, you'll have 2 consecutive closes above that level. Profile change in trend suggests that gold continues to move higher. Move higher to where? I'd have to go with 33.46. 33.46. Now, it's not much higher than what we're trading right now at 33.39, but that would be the next resistance point that Stevie would be looking at. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. I'll put the ES Mini intraday charts up on our screen out here, and the only topping signal that I see at this moment in time is coming from the 4-hour time frame chart. The current bar does not close until 2 p.m., and that would become bar number 8. So this is suggesting to us that we either rally into 2 or we rally into the 4 o'clock time frame. And right now, it depends on where price heads to. So we got resist up at 63.34 out there, 63.47 on the daily time frame, 63.43 on the 5-hour, 63.34 on the 2-hour, 4-hour. That is 63.35 on the 2-hour. So it does look to me like we are headed higher. How price deals with those sell areas, those profile resistance levels, that I don't know. That's the only topping signal that I really see here. So this suggests that the rally should go ahead and continue. Let's take a look at the NQ, see if we get its charts here to fire up for us relatively quickly, see if there's any kind of signal there. I think it's the NQ that is driving the caboose out here. So on its 4-hour time frame, it's only in bar number 6, and it is dealing with resistance as we speak right now. So let's open up that 4-hour time frame chart, which did have a Rhodes, or does have a Rhodes momentum indicator top. That formed at 10 a.m. That was back on the 15th, so 2 days ago, and it closed above 23,222.75. We're 23,225.50 right now, but 23. 222.75. If we close above that, we negate that signal, and that suggests from an intraday standpoint that we continue to head higher. If I look for the next, the 2-hour chart is right at a resistance area as well. That's its T9 count breakdown level. So this is at 222.75. If we close above that, now this 2-hour chart bar will close at 12 noon. If we close above that 23.222 level out there, that would be a bullish outcome. So we're up at resistance on the 2-hour, the 4-hour, the 5. We're up at resistance right now. On the lower portion of our charts out here, we do have a TD9 count top on a 10-minute basis out there. Woohoo! That is going to complete here at 11:30. The top, the pattern is already in. Now, in this instance here, on a 10-minute basis, you can see that there's a new profile that's formed. It may not be that easy to see if you just look at the black digits on my the very right portion of that bottom right-hand screen out there, you'll see 23, 127.90. That's a profile level. 23, 153.70. That's the second profile level. That's the buy zone out there. And then the third profile level, the top is at 23, 205.30. Right now, I don't know, won't know until 11:30, but right now that profile has formed below price. And that's a bullish message. And that says that price typically or should pull back towards 23,190 to 23,205, which is where it should find support. And that would be the next intraday buy point. If that level fails, we could get all the way down to 23,115, or the other areas 23,127, 23,153 out there. So we're the NQ is the one that is up at resistance. If anything is going to slow the rally down, I'd have to say it comes from the NQ charts out there. So these are this is what I really think you should be paying attention to. So I do hope that helps out, just as a general overview of the markets and what we're looking at. Why don't we go take a look at some of the requests that have come in. The first one coming in from Mr. Bill wants to look at ticker symbol ABBNY. ABBNY, I think he said it was a engineering firm. In Germany, it is having a heck of a day out there. Trade down to 64.20. One heck of a big gap to the upside, which took out its TD9 count top from all the way back here, Mr. Bill. That was in June 16th of 2025 out there. That top had remained in place until today. On a monthly time frame, this is negating. This is negating a TD9 count top. All that it needs for the month is a close above 59.52, which also is the top of its profile. So where's this thing headed to longer term? Out here. Great question. Just put up the longer term chart. You can see the A to B equals CD pattern. I would say it's more likely just an expansion of this level. I can't, with this tool here, measure those expansions. I'm just going to move the A to B over to the C to D level. You can see we're probably at about a 1.272, probably on our way to a 1.618 expansion of this pattern out there. Could this be forming a new A to B equals CD pattern to the upside? The answer to that question would be yes. The volume that we're looking at is September of 2024. There was 5.2 million shares so far. We're only halfway through the month. We're at 3.3 million shares. So could there be a new A to B equals CD pattern that is forming out here for this instrument? The answer to that question is absolutely. And that would get you, that would be one heck of an A to B equals CD pattern. That would get you up towards the 80.59 level. Again, that's coming from the monthly chart. So we'll take a look at a much longer term picture. But everything here looks muy bueno, Mr. Bill, on ABBNY. Hope that helped you out. Tom G wrote in. Tom, you wrote in, and I didn't get a chance to read the message entirely. I only was able to, just in trying to get charts set up with time and everything, RGTI, which I believe you said you took a long position in that based upon the analysis from yesterday. But let me see. I don't even think I can pull up that email. Certainly not easily, unfortunately. No, I'm not going to see that. So let me just again give you the replay here on this instrument. The first thing, if we take a look at the weekly time frame chart, its B point of an A to B equals CD is the week of May 30th. Volume, 231 million shares. We are at 283. That is a confirmed A to B equals CD pattern to the upside for the weekly time frame out there. That A to B equals CD pattern ought to get us up towards the level of somewhere around 1895. I would say more likely than not, this is less than a 0.618 retracement, the B to C retracement, and therefore we're trading on the strong side now. The left-hand side of that C to D leg, it looks to me like what price really wants to do is make its way up to the top of its monthly profile, and that's at 2142. There's no topping signals in place at all for the daily, weekly, or monthly out there. So I hope I answered your question. My apology, Tom, for not really being able to have the time this morning to look at the detail of your question. I was just really trying to get charts set up so that things would go smoothly out there. So hope that helps you out as always. Good to hear from you. Thanks for writing in. Our next request coming in from Dunkin' Donuts in the Tiger's Den. And Duncan Steve would like to take a look at QUBT, which is having a nice day, and it's running right up into resistance. It's ready. Put on your boxing gloves because QUBT is taking on the opponent that's got resistance at 1968 and $20 even, Stephen, 2013. So you're running right up into a resistance zone on QUBT out here on a weekly time frame. weekly time frame, price remains above profile, and it's oscillator and change line, so it's in bullish breakout mode. But it does have a Rhodes Momentum Indicator top. So in order for QUBT to really get its mojo for the weekly time frame, 2188 is where price needs to close above. The monthly time frame chart, we close inside that swing point, which was December 2024, had 1.2 billion shares. We closed into it last month, 768. We're inside that swing point. We're lighter volume. Does it matter? It doesn't mean sell, that's for sure, okay? So that's not what it means out there, but you are moving up with lighter volume. You still do have a daily top, a TD9 count pattern, a Rhodes Momentum Indicator top. You still have a weekly. So, yeah, you got to be careful out here with QUBT, but everything looks pretty good other than those tops, but those tops are what I really think are under attack. When we come back from this break, we're going to take a look at CFLT. That's also for Duncan Steve. The DBA for GTE, the semiconductors, and AGX. Of course, I'd love to hear from you as well. Steve at TFNN.com or any ping inside the Tiger's Den. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We're looking at the ticker symbol CFLT. If we start with the daily time frame chart, what we'll notice is that it formed a Rhodes momentum indicator bottom pattern back in the early part of May. That led to an A to B equals CD pattern to the upside. That formed a sell the D point as well as a TD9 count top on June the 6th. That then took price into a consolidation with inside its daily profile, negated the TD9 count top. It did that on the trading day of July 2nd. The purpose for going through that is to let you know that on the daily time frame, there is no top. If anything, there's an A to B equals CD pattern on the upside. Let's see if it was confirmed with volume. It takes us back to that June 6th swing point that had 4.5 million shares. It was passed with 5.6 million shares. So the very first thing that we know here, Duncan, is with regard to CFLT for its daily time frame, it has a confirmed A to B equals CD pattern. If you give me a moment, we're going to copy, we're going to paste, and we're going to assemble, and that's going to give us our price projection area, not right to the T, but 28.82 is the price target. Now, before it can get to 28.82, it has to take on the sellers that resided two areas. 2608 is one area and 2763 is another. That's just simply from the daily time frame chart. The weekly time frame chart would have that same A to B equals CD pattern. Its swing point had volume of 27 million shares. It was taken out with 19 million shares. So lighter volume on the weekly chart. Does that make a difference? I don't know if it does or it doesn't, quite frankly. You prefer them both to be above the swing point with volume, but nonetheless, there's an A to B equals CD pattern. What I can share with you about CFLT, on a weekly basis, it's also trading into a sell zone, which is basically between where we're trading right now. So it's at between 25.64 and 28.58. So that just says that the A to B equals CD pattern has been confirmed for the daily time frame to expect a bumpy ride on that move higher. The only time when you would get a bit concerned out here would be, well, one, a close below the bottom of its daily profile. So we're not near that at this stage here. That's around 23.91, or a close below the oscillator and change line for the weekly time frame, and that's at 23.78 out there. But otherwise, everything here is supporting the idea of a further rally. It just looks like it's going to be a bit choppy out there, Dunk. So I hope that helped you out. As always, thanks for your request. GTE writes in and says, can we take a look at DBA, an agriculture ETF out there? And the question is it really an agriculture ETF? Now, what does Stevie mean by that? Well, it's supposed to be, and in fact, that's what it says, right? If you take a look at the name, the Invesco name, it's the Invesco DB Agriculture Fund. Is live cattle agriculture? Maybe it is, and Stevie's about to learn something. Because that's the number one holding inside of DBA, and live cattle futures. So, it's a 15% holding in there. Now you got coffee. Okay, you got 13%. Cocoa, 12%. Cocoa is going down. It's heading lower. Soybeans, about 11%. Corn futures, 10%. You've got, what do we have here? Sugar. Then lean hogs and feeder cattle. So there's more than just agriculture, so to speak, out there. But nonetheless, let's go take a look at the DBA out here. And the DBA right now is trading out at 25.74. I guess the question would be, is there a bottom in sight out here? Well, it did actually bottom with a buy the D point pattern back on July the 2nd out there when it formed that bullish engulfing candle. So only a close below that low. That low is at 25.59 would negate the signal. So you've got to buy the D point pattern that has led to just sideways movement out there. The weekly time frame chart does not have a buy the D point pattern. It's not of any kind of bottom pattern. It's trading below profile support. But you know the routine here, GTE. We really can't look at the DBA and get a feel for what's going on. We'd have to take a look at all those future contracts for all of those different components, and they are all different. They're not necessarily all lead contracts or anything along those lines out there. But that's what we'd really have to do, is go through at least the first top 4 or 5 that probably make up 60% of the instrument. But in the case of the DBA, it's trading into a swing point from back on April the 7th. That swing point has volume there of 2.7 million shares. This week, we are down with 525,000 shares. So you can see we're lighting loafers headed to the downside. You've got Rhodes momentum indicator top on the weekly, Rhodes momentum indicator top on the monthly, and we're back inside the profile level out there. So in order to really do this, wow, what a weird set of charts out here. Look at the bottom. Doesn't even come close to matching the top. So Steve's got a bit of work to do here the monthly does, when I get to another break or something. Let me remember what slot is that in. Boy, that got all screwed up. Okay, but with not just referring to the tempo, the very bottom panel of the screen out there. So with regard to DBA, it's a matter of going through each of those, and I don't have the time to do that. Really not set up to do that. So that's the best that I can do for you. GTE. I know you think it's all agriculture. Maybe you do. Maybe you don't. Maybe you didn't take a look at it. Always take a look at what the underlying instruments are. Let's go take a look at. So what is it? Yeah, I guess they're farming cattle. You know, I don't know. Anyway, it doesn't really matter. Let's go take a look at the next request that came out there. That next request coming in from, that was to take a look at actually the socks. But I'll do this out of order. So let's just simply because I pulled it up. AGX, this is for Dennis in West Palm Beach. Dennis, AGX right now is testing, I want to make sure, profile support. The profile support level is 204.70. We're trading at 204.88. We're trading into a swing point, a bullish hammer candle from back on June 20th. Volume there, 877,000 shares. We're pulling back with light volume into that candle. This says, Dennis, that if price were to close today below 206.98, the high of the June 20th, a swing point out there, odds favor a test of that low, 193.82. Weekly time frame chart. Rhodes Momentum Indicator top. Price pulling back into its bullish structured profile. It's got support at 194.79 out there. 194.79. So if that level fails, obviously the hammer candle, a close below the hammer candle in the daily time frame on June 20th would be a failure of that bullish structured weekly profile as well. If that all unfolds out here, then what we're likely looking at, because you may at the end of the month here, the end of July, get a Rhodes Momentum Indicator topping signal. I do see a wave number 7 signal, so that is very likely to confirm, and that would then suggest a pullback to the 165.53 level out there. So that's AGX. And it does look like it wants lower price, but you've got the parameters to be able to make that call. So, Dunk, hope that helps you out. No, that wasn't Duncan. That was a Dennis. Duncan wanted to take a look at the socks out there. That's what it was. So Stevie was out of order. And let's go ahead and pull up the semiconductor index out here. And yesterday, this had formed a Rhodes Momentum Indicator top with its gap to the downside. Now, that gap to the downside was not an island top out there because of the candle sets from July the 10th out there. But we've closed the gap today by its move higher. And so any close above 57.14.35 says there's no top in place on the daily time frame. By the way, the weekly time frame negated its TD9 count top, says it wants to move higher. The semiconductors simply want to go test its all-time high. And that's from July 2024, and they're headed to 59.31.83. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets. with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We're taking a look at Berkshire Hathaway B shares out here. This for Marvin. Marvin's looking for a swing trade. Marvin, the answer is take the trade right here, right now at 469.74. And if price closes below yesterday's low would be 468.88. I jettison the position, because in the daily TD9 count bottom pattern will have failed in one day. Price remains below profile support and its oscillator and change line, and that would suggest lower price. The other thing to be watching for is tomorrow, if you got into this trade. If price closes below last week's low, and that's at 471.40, that'll negate a weekly TD9 count bottom. That'll say that Berkshire Hathaway's got something majorly going on out here, because as many know, the S&P 500. I'm just going to put that my black background screen to put the correlation between Berkshire Hathaway and the S&P 500. You'll see it is a very strong directional correlation. That correlation is not in effect as we speak right now. So you're looking for the swing trade. It's basically right here, right now, and you're either going to be in it or out of it by the end of the day come tomorrow. And again, you'd be out of it if there was a close below 471.40, but I gave you where you would be out of it today if it closed below as well. So those are the two levels to be watching there, Marvin. I hope that helps you out. And as always, thanks so much for taking the time to write in. S&P wants to take a look at Oscar out there, OSCR. Let's get that on our screen out here. And OSCR is trading out at 1457. It is testing profile support this morning, which is at 1446. What we failed to have here is any kind of bottom pattern, per se. What do you mean per se? Well, what we've got is really a test of a swing point. Let me just pull it back on the daily just to make sure. Yeah. So with this thing broke out, gapped up, I should say, on May the 7th. And then price pulls back and basically fills that gap and generates a swing point on June 2nd, with volume of 12.1 million shares. 12.1. 12.1 was tested and rejected with 32 million shares. Was tested with 30 million shares. Yesterday was tested with 30 million shares. So if you're wondering why is this thing here, Oscar, that is S&P, continuing to bounce along the bottom here, I think it's because it continues to test this swing point from June 2nd that only has 12 million shares, and it continues to do it with more volume. When you do that, you typically test it. Now, if price today were to close below 1444, odds would favor a test of 1357. Today's volume, 21 million shares, again, going into a swing point that only had volume of 14 million shares. So there is a lot of selling pressure to the downside inside of OSCR. That's really kind of all that I've got for you out there. Though I gave the weekly profile, by the way, the bottom of that profile on a weekly basis, 1449. That's both the center and the bottom. So a close below that would not be a good thing. That would actually suggest a move back to the 1228 level out there. So that's what's going on with regard to Oscar. Let's take a look at the next instrument request out here from Jambalaya. QBTS. Well, that's not it. So we're going to put that in here. QBTS. See what we've got. My apology. Thought that I had done that. I may have done that and put it in a different spot. But QBTS trade out at 1926. I do not see any kind of a daily top out there. The weekly top does have a Rhodes momentum indicator top, and that says that price, in order to negate that signal, you need to see a close above the high from May 23rd, and that high is 1977. Also happens to now be the top of its weekly profile. On a weekly basis, that swing point had volume of 1 million shares, a little over 1 million. So far this week, we are up into it with 100. Whoa! Is that right? Oh, that was 1 billion shares, not 1 million. Okay, so the swing's got 1 billion. We're up this month so far with 159 million. Wow, that is really light weekly. That's really light volume. Doesn't matter. Price looks like it wants to go at least tackle that high out there on the daily time frame. What are we doing here? The daily time frame is going into a swing point. I need to open up the chart. So the swing point is a day of May 23rd. That's where we're trading it to. 148 million shares that day. We are into it with 51 million shares. Got pretty good volume. So price on a daily basis pushing that swing with volume. I would say that QBTS is going to go tackle 1977 out there. And if it can close above that, it actually would set up a daily A to B equals CD pattern to the upside out there. So no idea how this battle is going to unfold. The 195-minute chart, which is in the process of negating a TD9 count top and potentially closing above TD9 count breakdown resistance at 1895, that would be a bullish outcome. The 195-minute bar completes at about 12:45 this afternoon. The 130-minute time frame chart. This candle is going to complete at 3 o'clock. Nope, I take that back to 150. 150 today, you're going to have a completed 130-minute TD9 count top. And the question is, well, this is interesting. So here's what I'd be looking at, Jam. I'd watch a 130-minute time frame chart. See whatever the high is that comes in. But I'd also be watching the 65-minute chart, because if the 65-minute chart, next one closes at 12:45, closes above 1928, we'll negate a 65-minute time frame chart immediately. And that suggests a strong upward momentum move out there. So here's the call. I think we're headed up to 1977. I don't know what's going to transpire when we get up there, but that 130-minute time frame chart could be signaling to you and I to expect and anticipate some type of retracement. That some type of retracement ought to take us back towards a 1703 level out there. So that's what I see when I take a QBTS. Hope that provided you with the information you were looking for. We had a request from Kate inside the Tigers Dome. Oh, that's where I put it. To take a core wave, and thanks for providing me with that ticker symbol. CRWV. Now, this is an instrument that started trading about 4 months ago. So what we don't have out here a lot of is data. But we do have enough data, Kate, to see that this thing rallied strong. It was on a sprint coming out of the gates and a top with a weekly TD9 count top. Unfortunately, there's not enough data to get profile levels, an oscillator and change line, or anything along those levels. So what we got to do is come take a look at the daily time frame. Well, what do we know about it? Actually, the daily didn't generate a topping pattern. However, it did so by generating a profile change in trend by closing below that profile. So it was a bearish profile change in trend. There is a new profile that has formed. You have support at 133.78, or you should have buyers at 133.78, and your sellers exist between 154.06 and 162.17 out there. I wish I could help you out further. But that's the information that we've got. That's the best that I can do. I do hope that that information helps you. We got Hector and Patty want to take the IWM, and their question is, did it bottom yesterday? No idea where I put in that IWM chart. I know that I did, but I'm going to put it in again out here. Well, let's pull up the IWM. Actually, what we should do for Hector and Patty, and we're going to do it, because I said we should do it. Now, we're going to go to break here in just about 20 seconds or so. I'm going to pull up, what I'm going to do, Hector, is I'm going to pull up the IWM the RTY, and the RUT, the three daily instruments out there for the Russell 2000. Let's see what they are signaling to you and I. But your question is, did it bottom, and are we headed to 244? One thing I can share with you with regard to the IWM, you've got resistance at 227.67. So that's going to be your first battle that you're going to need to contend with. Well, that's not your first battle, but that is a battle up ahead. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. You got the Russell 2000 on the left-hand side, the cash indice, the future contract in the center, the IWM, the index ETF. Let's start with the index ETF. Here's what we know. Prices trade above profile resistance at 222.19. It's traded above its green oscillator and change line at 223.31. Those are bullish conditions. Prices pushing into its swing point from July 10th. That had volume of 33 million shares. So far, we have done 11 million shares. Seems to me like that's a little bit light. Decent volume. Not super light, but it seems like a little bit lighter volume. Here's what I would say. If price does close above 222.86, odds favor, if it's for light volume, then we go tackle that high being 226.05. And that's the Rhodes Momentum Indicator top now. That pattern would be negated with a close above 224.23. On the Russell 2000 equity future contract, the Rhodes Momentum Indicator top does not get negated until we close above its all-time high. That's a candle set from July 10th, and that's up at the 2292.60 level out there. The Russell 2000 cash indice just simply needs a close above the high from July 15th, and that's at 2257.60. I provide that to you because these are really the first battles. So until these battles take place and we see how things resolve themselves, obviously price is not going to get to that 244-ish area that you're headed to. But if in fact all three of these negate these signals out there, then the answer would be yeah, that is very much likely where we are headed. So I hope that helps you out with regard to that. Let's take a quick peek here at what. Let's go back to the day trading. Day trading time frame, and we took a look at the NQ earlier. We were looking at what we were looking at resistance, and prices trade above those resistance levels out there as we speak at 1156, and we don't have any kind of probably a 15-minute chart. Let me see here. All we've got out here for tops really coming from the 15 and the 10-minute time frame chart, and I don't think that's enough to stop this train from continuing to motor on. Folks, thanks for joining me today. Hey, by the way, tomorrow I'm going to record the show early from 8 to 9, so please join me early from 8 to 9 tomorrow. We'll make it as pertinent as we can for 11 to 12. Have a terrific Thursday, folks. Take care.